This is in regards to an update regarding Rites Limited. The company is backed an order, multiple orders in fact. We'll just quickly check some details here. Okay, there are two orders. One is from Oil India Limited and the other one is from Nomalgra Refinery Limited, worth about 312 crores. The market cap is 10,900 crores. Current price about 228. Uh, so shares have seen a bullish moment after securing the two orders, 155 crores and 157 crores. One is from Numalgira Refinery for railways, and the other one is for uh, NRL Terminal Rangapani Bulagrin, 157 crores. Navratna PSU under Ministry of Railways projects 20% revenue growth and a 10% net rise by 2020 March 2026. That is next year, FY26, FY27. Sorry, yeah, FY26. Driven by strong execution and rising orders, the company targets 10,000 crore order book, securing 110 orders worth 19 crores this quarter. Chairman Rahul Mithal highlighted the company's ongoing efforts to recover from previous dips. Execution has been improving sequentially, and what we are aiming is that we end the year uh, to try bring the top line dip to about 10% or below, bottom line dip to about 20% or below. So trying to improve on the dips that the company has already gone through. So moving forward, the increase in all the streams of business and the percentage of competitive orders, the margins are settling down in this range of about 20% earnings before interest, taxes, depreciation, and amortization margins, profit after tax. Recent orders, Southern Railway, South Central Railway for conducting the final location survey for high-speed elevated rail corridor between Hyderabad, Bangalore, Hyderabad, Chennai. Contract is valued at 28 crores to be completed in 8 months. Preparing detailed project report, final alignment design, traffic survey report, ROR calculations, detailed estimate and EPC documents using modern survey techniques like Airborne or terrestrial lidar. This is a domestic transaction between a government and a government company. Export book of 1300 crores from Bangladesh, Mozambique, South Africa with revenue realization target 40% contribution from exports. Company is debt free, good dividend yield of 5%. Company has maintained a healthy dividend payout of 88%. Company has been maintaining ROE 20% over the last 3 years, maintaining healthy ROCE 27% of the last 3 years. Healthy interest coverage ratio of 128. Company has maintained effective average operating margin of 23% in the last 5 years. Company has delivered poor sales growth of 3.68 in the last 5 years. Poor profit growth of 2.9%. Industry PE 24. Company is trading at 29 times its earnings. Book value 53.8. Company is trading at 4.25 times its book value. ROCE 25, ROE 17. Revenue and profit growth the last 12 months. Revenue growth of -8, profit growth of -14. Promoter share 72%, that is the government of India, while public is 15%. FII is 3.34, DI is 8.83, return on assets 8.35. Current ratio 1.61, quick ratio 1.31, earnings per share 7.68, inventory turnover NA, interest coverage ratio NA, it's actually 128, so it doesn't have any debt. Annual turnover ratio 0.42, market cap 11,000 crores, cash of 3,060 crores. Consultancy segment, trunky segment, exports, leasing, domestic 92%, exports 8%. company has a pan-India presence offering PMC services across railway infrastructure including WDFC, EDFC, urban planning in Ayodhya, airports in Gwalior, highways including Purvanchal Expressway, etc. Leases 90 plus locomotive at 35 sites, manages 30 plus mini railway system and conducts 1 lakh annual inspections. It operates from 6 project offices, 5 inspection offices, 12 project units. As of Q3 FY25, it has 700 ongoing projects, including strategic projects for the government. 9 months FY25, the company has order book of 8,000 crores. Yes, including orders worth 4,000 secured in FY25. Order book Trunky 45 Consultancy 35 Exports 17 Others 3. The views and investment tips expressed by the investment expert broking houses, rating agencies on behalf of TradeBrains, Phenology, Screener, TradingView, and Trick Tapper are of their own and not from their websites. Investing in equities poses a risk of financial losses. Investors must therefore exercise due caution while investing or trading in stocks. Please consult your investment advisor before making any investment decisions. So let's move on. Uh, this is the symbol of the company. This is the price traded today. This is the last 5 days, minus 6.3%. Then last 1 month, 16% up. Last 6 months still at a negative return of minus 32%. Overall, in the last 1 year, down 33%. So there is scope of improvement. The high of 344 for the year. So that is the next target that the company would be looking to achieve and bring down the uh, current correction that has happened in the stock. Revenue down 15%, net income down 16.6%, diluted NPS down 16%, net profit margin down 1.2%, EPS missed by 10%. So the last 3 quarters sentiments have been negative. Earnings per share missed all the 3 quarters, so that is impacting the overall value of the stock. Then debtor days 134, slightly gone over. Then improvement in working capital days over the last 3 years, so good. Employees 2.73k, that is 2,730 employees, 166 added, 6.5% in the last 1 year. Commercial service sector, miscellaneous commercial services, engage in provision of transport infrastructural services operating through consultancy, leasing of railway rolling stock and equipments, export of rolling stock, equipment spares, trunky construction projects. Company founded in 1974, headquarter in Gurgaon, India. Then shares rise with the information today. Uh, so billion, if you divide the billion maybe by 10, sorry, by 100, you get the number of crores. 156 crores, 157 crores, total about 313 crores in total. So billion divided by billion, or you can say 1.56 billion into 100 gives you that many number of crores. To make simplified for Indian standard. Then performance dip, you can see the dip, though the shape is upward, it hasn't had the corrected V, and market sentiment is negative, impacting the overall stock value and the future performance of it. So again, look at net income, net profit down, then certain estimates have been met this year. However, the previous quarter FY Q1 24 and Q4 FY 23, both targets were earning targets were missed, which is also one of the major reasons that the stock has been on the negative trend. Another update: the company has terminated the order secured from UPSBL. I'm not really sure when this order was received, but we'll need to analyze and check for more details. This is already covered. We've gone through all of this. Hasn't fared well amongst the lowest performers. Valuation seems to be overvalued versus the market average, lagging behind the market in financials growth. Profitability showing good signs of profitability and efficiency. Entry points: stock is underpriced and not in the overbought zone, showing good signs of profitability and efficiency, lagging behind the market in financials growth. Analysts have suggested investors can buy this stock. There will definitely be a new bullish trend in this very soon. Engineering and consultancy company faced a year-over-year revenue and net profit decline of about 16% in the last 1 year. Uh, order order book of 8,000 crores. So we've been through most of it, despite challenges in export orders and having low margins. Management remains optimistic about future growth, particularly in Middle East and IMECC corridor. Proactive approach to securing export orders and maintaining a high dividend payout ratio underscores confidence in the financial stability and the current market dynamics. Revenue decline and low margins for orders or export orders, especially decreasing market share, lower than industry revenue growth. So industry revenue growth of 12% and the company has managed only 2.51%. However, since it's a steady business company and it's owned by the government of India, that is the reason why the stock has done well in the past. Over the last 5 years, net income has grown yearly at -0.61. Industry average is about 20%. Yeah, this is the overall market value. High of 387. Highest volume traded on December 31st. High PE of 42. Price to book value 14.4 on July 8th. Some peer comparisons, price wise. Uh, Three companies over 1,000 rupees and market caps in range of 2 to 9,000. Sorry, this is the high PE again for most of the companies. Price to book value over 3 to about 8. Return on equity, some companies are low as 8. Industry average seems to be about 15, 16. Some companies are doing about 24, which is good. Sales growth negative in the last 1 year. Profit growth negative again. ROC, ROE decent. ROC also good. This is high. The ideal cash flow to price ratio should not be more than 10. So it should be under 10. So this is on the higher side, overvalued. This is very good. Debt-free company. Promoter holding, public holding graph, and dividend payout details. This is detail in regards to the interim dividends is paid over the last 1 year. So four interim dividend payments last year, which is a good sign. And Investors are Life Insurance Corporation 6%, Nippon Life India Trustees 3%. So you can look for more details on the internet. You will be able to find more details. Then reserves 2,100 reduced reserves due to possibly of loss, and liabilities, other liabilities have increased. That is it, friends. Thanks for watching. Please connect with another video tomorrow. Please share this with your friends, family and associates who may benefit from this information. Thank you. Wish you a happy week and a happy month in advance.